Hi, I'm Anna Napoli for the Finance News Network, and joining me now from De Grey Mining is Executive Chairman Simon Lill. Simon, welcome to FNN.
Thanks, Anna.
Now, first up, can you give us an introduction to De Grey Mining?
De Grey Mining is a gold development story. We're based in the Pilbara region of northwestern Australia. We started up there actually in 2003. We've got over 1,500 square kilometres of contiguous tenements, and we've got a board that is led by myself as Executive Chairman, but we've just recently been moving to improve the board, strengthen the board, I should say. We've got Mr. Andy Beckwith, who's our Technical Director and really in charge of the geology, which is what we're all about at the moment. Mr. Brett Lambert, who's a mining engineer, and we've just recently appointed a gentleman by the name of Mr. Peter Hood, who's the recently retired President of the Australian Chamber of Commerce and Industry, so we see him as a good appointment. And then there's myself and Mr. Steve Morris, who've been with the company now for 5 or 6 years.
And Simon, you mentioned the northwest region of Western Australia. What makes this area so unique?
Well, the northwest is, the Pilbara region in particular, is renowned for its iron ore, and Port Hedland is the world's largest export port for iron ore. I think they move something like 500 million tonnes a year through there, which is an enormous amount. It's not renowned for its gold, and yet it sits in a basin that is somewhere between 2.7 and 3.3 billion years old, which, as I understand it, is the period where something like 80% of the world's gold has been deposited and found from. So it's not recognised as a gold province, which we find unusual because we would suggest that we've got lots of gold.
So let's talk about your Pilbara Gold Project. What's the size of the resource?
At the moment we've just recently announced we've got 1.4 million ounces of gold. It's at a grade of about 1.6 grams per tonne. Something like over 50% of that's in measured and indicated, which is a huge bonus for us in terms of drilling out resources for financing purposes, etc. More importantly, we've just recently been stating that our target is to get to 2 million ounces and beyond. We've got a corporate target of 3 million ounces. So we believe there's quite a significant amount of gold in the region.
And how's the drill program progressing?
We've been drilling for us as a small company quite aggressively for the last 12 months, and our plan is to continue through the next 12 months. There are some seasonality issues. January, February, March is the wet season up there, and it's hard to get the rigs to the right spots at times, but we have ongoing drilling there at the moment. We've got 3 rigs working there at the moment.
Okay, and what are the economics of the project?
We did a scoping study over 12 months ago. That showed positive economics. There were some probably disappointments in one sense, that the recoverable resources weren't as significant as we initially had hoped. It showed that there'd be a 4.8 year mine life, but we also knew where we had to go. We had to increase resources. That was pretty simple. We had to improve the metallurgy. We've been doing a lot of work on the metallurgy. We haven't said anything about that yet, but we are getting good results there as well. And we're very comfortable that as we move into pre-feasibility studies to have a better look at, a new look at the economics, that we're going to show a plus 7 year mine life, and the economics will commensurately look a lot better, but they were positive initially anyway.
Let's talk about financials. Can you give us a snapshot of your company's financial position?
As a junior explorer, life's always a bit tough. We have fortunately literally just finished the exercise of 60 million options at 10 cents. So we've just raised $6 million. We probably had 1 or 2 in the bank prior to that. So as we finish the year, we're in a reasonably good shape to carry out the exploration program through the first half and beyond of next year. We've got a couple of good shareholders, that Kirkland Lake and DGO. We don't tap them for money automatically, but we think they're supportive moving forward as well.
Okay, and finally, a comment on your share price.
If we approach, I need to say, the plus 3 million ounce corporate target, I need to stress it is a target, but if we start moving in that direction, companies such as ours tend to be valued at $40 to $60 a resource ounce or thereabouts. We believe the cost of finding resources will be significantly cheaper than that. We think we can do under $20. That should result in share price appreciation.
Last question, Simon. Is there anything else you'd like to mention?
Well, I haven't mentioned the conglomerate gold, which really kicked off what they describe as the Pilbara Gold Rush last year. A little bit of the heat seems to have gone out of that sector, but we have been doing test work there. We've always said if we get 5 grams a tonne out of it, we're pretty happy with it. The results seem somewhat commensurate with that. And that to us is another gold resource target that is different to our structural gold that we've been discussing. Apart from that, yes, we've got quite an interesting grassroots lithium project. We're in lithium country in the region. There are 3 or 4 very significant lithium projects within 50 kilometres from us, so we don't know where that will head. And we've also got a pretty good base metals resource that actually is in the inferred category. So it's a good starting point for a base metals resource. So we have other things other than just our structural gold.
Simon Lill, thank you for the update.
Thank you.